In this week's trading plan we go into range trading, a new strategy. Last week we talked about swing trading. As long as the market's trending, swing trading is a great opportunity to trade the markets, but as you may know, market is moving sideways most of the time, and when it's trading we want to be there as swing traders. But sometimes you have a watch list where almost everything is moving in a range, is moving sideways, so you can look for new opportunities if you just want to swing trade. But what I do when I see that I see a potential range, I switch to range trading that market. What's the core of range trading is a sideways moving market that's moving up, moving down, moving up. It's not really breaking through for trending up or trending down. This is the basics. Of course, in real life, you don't see price moving like that. It moves like this, but we see a couple of higher highs. Then we see a touch of resistance. Then we see price struggle, fall back, touch the support area, then move back up. Here we see a touch as well. Here we see a touch. These are all. This is a sideways moving market, so gradually it's moving up, it's moving down, it's moving up, but it's in the same zone. So the thing you should look for is a sideways moving market. In this example, this was Shopify a couple of weeks ago. As you can see, this is exactly what I just pointed out. Price is moving up, price is moving down, up, down, and as long as we are in this range, we can try to enter positions near support and of course exit them near resistance. To identify entry and exit zones, as you can see, price never comes back to a specific support or a specific resistance. When it's moving sideways, it is this near resistance and near support that price will turn. Well, let me show you this on a real life chart. As you can see over here, Alibaba moved, had a big correction. So well, I'm not going to get into the technicals why we took this trade, but if you follow my YouTube channel and my Instagram and Twitter and everything, I pointed out this. When I saw this level break, it would interest me. Well, it did, and price started moving. I started adding positions around here. We had another swing, and I added positions around here. I thought we had another swing, but for some reason price is consolidating in this area. So what I just did was I pointed out this line. Let me give it another color so you guys can see what I mean. And here is to the upside we have a resistance. So for some reason price is hovering in this area, which is not great for me because I have open positions that need to start running to the upside. As long as that ain't happening, then I am not making money. So when I see this, I am considering to enter a long position over here and close this position and probably some other positions near resistance, because I want to trade this one within a range, and I start swing trading it once it breaks. But this gives me a nice view of a potential range, because we see a couple of touches near support and resistance. Like I said, I draw in support and resistance. Around support and resistance, I draw in these levels, supply and demand zones. This one can go a little bit to the upside like that. Wait a minute, let me get that one in the way I want to, a little bit like this. So once price moves into this demand zone, there are some new buyers here. So as you can see, price reacts and moves back up. When it moves into this supply zone, there are probably some sellers who are shorting this. The longer a trend is moving in a range, the longer price is moving in a range, the harder those levels become, and more buyers and sellers are spotting this opportunity for range trading. So the moves back up and down are getting more obvious. For now we are into this range trade in an early stage, so that's the next thing we do is determine where we get in and where we get out. Supply and demand zones, like we just pointed out on the live chart. This is as well for Shopify, the same chart we were looking at. This one is taking quite some time, so it's pretty obvious that this is a range trade. That's why I showed you the Alibaba trade because we are still in this area. We're not yet moving as long as this one is moving. But what's important is that you enter in the demand zone with a long, you exit your position in a supply zone, and of course you go short in the supply zone to the downside, and you take your profit back in the demand zone. Pretty obvious where to take the profits. The stop losses, of course, they need to be outside of those support and resistance and outside of those supply and demand zones, because once price breaks, we are seeing a breakout, and that means that range is over, and we have to close our positions, and we have to look for new opportunities, probably a next swing trade, for example. So let me show you that on the live chart. So like we did here, supply and demand. Let me put some arrows in here so you guys can see what I mean. This zone touches the demand zone, and of course this zone is the place where you take your profit. So you go long around here, it comes back, but it doesn't break, so your stop loss doesn't get hit because your stop loss is below this level. Price starts moving up and you take your profit. You go short over here again, it doesn't move above this zone, so we take the short and we take our profit around there again. So it's, and over here we took our profit from the short, and we go back for another move to the upside because we think that price will bounce here, and we take our profit here again. So that's the potential continuation pattern we are expecting here, and vice versa, etc., etc. Now that you know what range trading is, it's quite obvious. You have support, resistance, you draw on those supply and demand zones, so you have a very clear picture of where to enter, where to exit, and of course you exit by taking your profit, or you exit once your stop loss gets hit because the range is broken. As you can see over here, the range did break eventually on Shopify with a strong move, so I think you should be happy that your stop loss is hit here, because you take a small loss just above this supply zone. And as you can see, price started moving to the upside pretty fast, so you do not want to be in this trade anymore when you went short over here. So that is a nice way to get out of a trade and to protect your capital. So on this Alibaba chart as well, we can take those trades for probably some time, but once price breaks out of this zone, so it breaks this level. Let me point it out very clear. This is a break of this previous trend line. We break out of this, the supply and demand zones. It's also obvious that price breaks to the downside, of course. In that case, you have to get out of this trade around there. Let me see if I can point it out for you guys. Once this level breaks, we have to get out. Same goes that if the upper level breaks over here, then we get out. The range trade is over. We're not in a range anymore. Price is trending again, which is great, because in that case we start to trend trade, or we start to swing trade, or whatever opportunity we can capitalize on in that kind of market. In this case, we are just getting out of the trade because the strategy of range trading is over in this scenario. And I know a lot of people ask me a lot of questions about indicators all the time. I can't point it out enough. You do not trade indicators. Indicators are tools that help you to paint a picture, to give you confirmation on the things you're seeing on price action. You never trade. Trading the moving average, to me, is not a strategy. It's just, I don't know, it's not a strategy. But if you want to use indicators in range trading, of course you can look at one eye at the RSI. If the RSI is neutral like this, moving within the zones, then probably price is flat as well. Like you can see here, it's moving in a range. But once price starts getting momentum to the upside and above the 70%, the 70 mark at the RSI, then price looks like it's getting momentum. You can see here that momentum was building up, and it was in fact building up, and we saw the breakout. So by this move and this touch of the 70, you could have, maybe you were a little bit careful with going short. Maybe you wanted to see price first come down and then you want to short for to be safe. But you know, you can, of course, you can use an RSI. Of course, a moving average is the same thing. You can put in a moving average to see that price has to keep hovering around that moving average. Once price breaks away of the moving average, as convincing as it did over here, and of course it breaks support or resistance, then it then starts trading above the moving average, of course we are in an uptrend. So it gives you some kind of information, so you can add indicators if you really want to. To me, the price action, the support and resistance, that's of course the core of range trading. I think range trading is a very nice way for beginners to trade the markets. It's very clear where to enter, where to exit. You can trade very safe. You have to be able to identify the market. Is it trending or is it ranging or whatever? That's not that hard when you draw in some support and resistance zones. So yes, well, I think after swing trading, now range trading, I gave you guys two nice strategies to combine all the information I've been giving you in part 1 to 4 of the trading videos. Let me see if I will add a new strategy next week for you guys. For now, good luck with practicing in range trading. Feel free to ask questions, and good luck.